Welcome to Talk Tickers, where your shortcut to understanding today's key earnings calls.
And today, we're jumping into the latest numbers from Viatris.
Right. So Viatris' first quarter of 2025, what's the headline?
Well, it's kind of interesting. Overall revenue, it dipped about 2% year over year, came in at $3.25 billion.
Okay, a 2% dip.
Yeah, but if you dig a little deeper, it's not quite the full picture. They have these divestitures, their indoor facilities. If you actually exclude the impact from those, their operational revenue, the core stuff, it was up 2%.
Okay, so ex divestitures, there's underlying growth. That's important context. What else stood out?
They definitely highlighted strong performance, good growth, specifically in Europe and also in China.
Okay.
And big news on the pipeline front, 3 positive phase 3 data readouts.
3, wow. Which ones?
Moxium, Zoolayne Low, and also Afixser, but specifically the results for Japan.
Got it. Moxium, Zoolayne Low, Afixser Japan. That's significant progress. Anything else on the sort of financial side? Capital return?
Yeah, they returned about $450 million to shareholders this quarter.
Okay.
Roughly $300 million of that was through share buybacks.
And the outlook? Did they change guidance?
No, they reaffirmed the full year 2025 outlook.
Yeah.
Holding steady there.
So, okay, a bit of a mixed picture maybe on the surface revenue, but underlying operational strength, key markets doing well, pipeline moving forward nicely and sticking to their guidance.
Pretty much sums it up, yeah.
All right, let's get into that revenue performance a bit more. You mentioned the 2% overall decline, but 2% operational growth. Break that down for us.
So the big factor was that indoor facility divestiture. That knocked off about $140 million from the top line.
Right.
But if you look at their actual core brands, their pharmaceutical portfolio, that showed 3% growth.
And what drove that brand growth?
A lot of it was the cardiovascular portfolio, especially doing well in emerging markets. Plus, they saw good growth in Greater China and also in developed markets. So, the core drug business looks pretty healthy.
Makes sense. So divestitures mask some underlying brand strength. How did things look region by region? Was it consistent?
Not entirely. Europe was pretty solid. Overall revenue up 1% and brand revenue up 2%.
Okay.
That was led by things like Creon, Brufen, and their thrombosis treatments. North America, though, saw an 8% decline.
8%? Why so steep?
Well, mainly the indoor facility impact hit there. Plus, they faced some increased generic competition. They did have some offset from new products and Brena, but still, it declined overall.
Got it. And emerging markets.
Also down about 5%. Again, the indoor impact played a role and some generic competition for older ARV treatments.
But some bright spots.
Yeah, cardiovascular brands did well in Latin America, and they saw strength in the M&A region, Middle East, North Africa, and Eurasia. So some positives offsetting the drag.
Okay. And the last segment, JAN.
Right, Japan and Australia. That was down 6%, mostly due to price regulations in Japan and Australia, plus some reimbursement changes in Japan. Generic volume helped a bit, but still a negative print.
So pricing pressures are definitely a factor there. But you mentioned China earlier as strong.
Yeah, Greater China grew 4%. That was pretty broad-based across e-commerce, retail, and private hospitals. So a definite positive driver.
Okay, that regional picture is helpful. Let's switch gears to profitability. What about their margins?
Their adjusted gross margin landed around 56%, which, was basically in line with what they expected.
But down from last year.
Yes, down from a prior year. And the reasons were pretty much what we've discussed. Those price regulations hitting them, the indoor facility impact, and also some increased supply chain costs.
Makes sense. And their spending. Operating expenses.
OpEx was actually pretty flat compared to last year.
Yeah.
They managed some savings on the SG&A side, selling general administrative costs.
Okay.
But that was basically offset by higher investments in R&D, which, you'd expect given the pipeline progress.
Right. Got to fund those trials. Now, there was a pretty big charge mentioned, wasn't there? An impairment.
Yes, that's right. A non-cash goodwill impairment charge. It was significant, $2.9 billion.
Wow. So what does that mean exactly? Non-cash, but still.
Yeah, basically goodwill is an accounting item reflecting value from past acquisitions. When a company's share price falls significantly, like Viatris did, and you combine that with, say, geopolitical or economic uncertainty, accounting rules might require you to write down the value of that goodwill.
So it's like saying those past deals aren't valued as highly now based on current conditions, but it doesn't affect their actual cash operations day to day.
Exactly. It's an accounting adjustment, a paper loss.
Yeah.
Not an operational cash outflow.
Okay, understood. Let's move on to that pipeline then, because those phase 3 results sound like the real highlight here. Tell us about Moxium first. What's the story?
Moxium is really interesting. It's for moderate to severe acute pain. The phase 3 data was positive, showing it works significantly better than a placebo, which you'd expect.
Right.
But the really striking part was the comparison against an opioid. It actually showed superior pain control versus tramadol.
Superior to an opioid. That's a big deal, isn't it, given the whole push for non-opioid alternatives?
Absolutely. And specifically, it was compared to a tramadol dose equivalent to sort of a higher level of hydrocodone, so a meaningful comparator. Plus, it showed a significant reduction in the need for opioid rescue medication.
So people taking Moxium needed fewer opioids overall?
Exactly. A greater proportion of patients on Moxium needed no opioid rescue medication at all compared to placebo. It really points towards its potential as a non-addictive alternative.
So what are the next steps for Moxium?
They're targeting an NDA submission, that's the application to the FDA, by the end of this year.
Okay.
And we'll get the full data presented at Pain Week in September. The market potential here is huge, over 70 million acute pain cases annually just in the U.S.
And they see it fitting where in the treatment path?
They think it could be a potential first-line treatment, fitting into both inpatient, like post-surgery, and outpatient pathways.
Very promising. Okay, what about Zoolayne Low? That's in women's health.
Yes, Zoolayne Low is a low-dose estrogen combination birth control patch. Also positive phase 3 data here.
And what makes it stand out?
Favorable safety and tolerability, which is key. They're planning the NDA submission for the second half of this year.
Okay.
And they're really highlighting what they see as potentially best-in-class performance for a patch. Specifically, low detachment rates, meaning it stays on well, and minimal skin reactions where it's applied.
Yeah, adherence and comfort are definitely big factors for patches.
For sure. They'll be presenting more details at the American College of Obstetrician and Gynecologist conference soon.
Good stuff. And the third one was Afixser in Japan. What was the update there?
Right. So positive results from a phase 3 long-term extension study for Afixser. Based on that, they filed what's called an SNDA, a supplemental application in Japan.
For a new use.
Exactly. For Generalized Anxiety Disorder, or GAD. And this is notable because apparently there are currently no other approved treatments specifically for GAD in Japan.
Oh, interesting. Addressing an unmet need.
Precisely. And the results have been accepted for a poster presentation over there at the Japanese Society of Neurology and Psychiatry conference.
So 3 big positive readouts. What else is cooking in the pipeline beyond those 3?
They mentioned progress on several others. Salidrop, Cenerat, and Sotofloin are moving along, with data expected in 2026.
Okay.
There was also news about an agreement related to Midorsia, giving Viatris expanded control over 2 assets there, Salatag and Cenemod.
Right.
Regulatory submissions are also underway for another drug, Sotogloin, in places like the UAE, Saudi Arabia, and Canada. Enrollment for other trials, Salad and Scenario Mod, is on track.
Sounds like a lot of activity.
Definitely. They presented data recently at some major rheumatology and lupus conferences and mentioned strong interest in a cardiology trial they're running.
And tying this back to financials, are these new products contributing yet?
They expect them to. They're sticking to their target of $450 to $550 million in revenue from new products this year. That includes anticipated approvals soon for iron sucrositide and octreotide.
Okay, a significant chunk of revenue expected from these launches. Let's talk capital allocation. You mentioned the $450 million return. What's the broader strategy?
They reiterated that returning capital to shareholders is a key priority for 2025.
Through buybacks and dividends?
Primarily, yes. And they kept some flexibility, saying they might repurchase more shares than their initial target range of $500 to $650 million if market conditions are right.
And how much cash do they expect to generate overall?
They're looking at about $1.7 billion in deployable cash flow for the full year. So quite a bit of firepower there.
Okay. Now shifting to external factors.
Yeah.
Any mention of things like tariffs or supply chain issues? Always a hot topic.
Yes, they did address tariffs. They acknowledged the potential negative financial hit from tariffs, specifically on pharmaceuticals, is a concern.
Right.
Their main focus seems to be on mitigating potential supply shortages or disruptions, really making sure patients can still get their medicines.
And how are they positioned globally for manufacturing?
They have a pretty big footprint. They sell in 165 countries and have 36 manufacturing, R&D, and packaging sites around the world. 8 of those are in the U.S.
8 in the U.S. That's quite a few.
Yeah. And interestingly, they said over half of their U.S. revenue actually comes from products made in those U.S. facilities.
That's a good buffer against potential import issues, presumably. What are they doing to mitigate tariff risks specifically?
They listed a few strategies. Things like increasing production within the U.S. even more, adjusting inventory levels, maybe shifting production between sites globally, using more U.S.-based third-party manufacturers,
Okay.
and even potentially investing in a larger U.S. manufacturing network down the line. They also mentioned their key import countries into the U.S. are Ireland, the U.K., and India.
Good to know they're thinking proactively about that. All right, let's circle back to the guidance. They reaffirmed the full year.
Yeah.
What gives them that confidence despite some of the headwinds?
Well, their base business outlook already included the expected impact from those indoor facility issues, so that was baked in.
Got it.
And they're still confident in hitting that $450 to $550 million target for new product revenue. Plus, there's an interesting comment about foreign exchange. Current spot rates are actually looking more favorable now. They think that could potentially offset the 2-3% revenue headwind from FX they previously expected.
Oh, so currency could actually be a slight tailwind now, or at least less of a headwind.
Potentially, yeah. They also expect the second half of the year to be stronger financially. About 52% of the full year revenue is expected then, along with higher adjusted EBITDA and EPS.
So back half weighted performance, any specific quarter timings to be aware of?
Just that free cash flow is expected to be lowest in Q2. That's mainly due to the timing of interest payments and some working capital movements.
Okay, good to keep in mind. Now, those indoor facility issues have been a recurring theme. Can you give us the latest update on the remediation efforts there?
Yeah, they said progress is basically going as planned. They expect to request a reinspection from the regulators around the middle of this year.
Okay, so reinspection hopefully soon. Are they making backup plans?
They are. They're actively qualifying other plants in their network to be able to supply the U.S. market, just in case, or to supplement.
And looking ahead, what's the expected impact in 2026?
They anticipate a significant rebound in revenue from the products affected by the indoor facility issues next year.
A full recovery.
Well, almost. They did specify that revenue from one product, lenalidomide, won't be coming back. But they also don't expect the roughly $100 million in penalties and sort of short-term disruption costs they saw this year to repeat in 2026.
Okay, so a path to recovery mostly, starting next year. What about their facility in Nashik, India? There was an inspection there too, right?
Yes, that inspection was about a year ago. They received a Form 483, which lists observations from the FDA inspectors.
And the status now.
They're still waiting for the FDA's final classification of that inspection.
Mm-hmm.
But importantly, Viatris said they've completed all the corrective actions they agreed on with the FDA.
And they have backups there too.
Yes, they mentioned they've qualified other facilities as a contingency just to ensure supply isn't disrupted.
Sounds like they've addressed the issues, are just waiting for the regulatory sign-off. Okay, one last area. Business development. What kind of deals are they looking for right now?
Their focus currently seems to be shifting a bit. They're prioritizing assets that are already in the market or very close to launching.
Rather than earlier stage stuff.
Exactly. The goal seems to be building up revenue and EBITDA more in the short term, rather than making big bets on mid to late stage development assets that might take longer to pay off.
Interesting. So more focus on near-term impact from M&A or licensing. Okay, let's try and pull all this together. From an investor's perspective, what are the main takeaways from this call?
Well, I think there are a few key things. First, that positive phase 3 data, especially for Moxium, is potentially a really big deal. You've got a large acute pain market, a clear demand for non-opioid options, and data suggesting superiority to a relevant opioid. That could be a major growth driver if approved and adopted.
Right, the Moxium potential definitely stands out.
Then you have Zoolayne Low, offering a potential best-in-class patch in women's health, another solid opportunity.
Okay.
The fact they reaffirmed guidance despite the indoor facility overhang and, general macro uncertainty suggests some underlying resilience in the core business.
Confidence in the base business and new launches.
Yeah. And the commitment to returning capital via buybacks and dividends is usually something investors like to see.
Sure.
On the flip side, you definitely need to keep an eye on the progress of that indoor facility reinspection. That's key to the 2026 rebound story. And any further news on tariffs could also be impactful.
Monitoring the risks.
Exactly. And finally, that shift in BD focus towards nearer-term assets is a strategic point investors will likely be digesting. Is that the right move for long-term growth? It signals a priority on immediate performance.
Okay, that's a great summary. Plenty for investors to think about. Now it's time for our This Is Not Financial Advices segment. We brainstorm an outrageous but plausible trade idea based on the call. What have you got?
All right, here's one, playing off that Moxium excitement. Given the strong data, the clear market need, and that potential superiority claim over an opioid.
Uh-huh.
Consider a speculative long position in Viatris. You're essentially betting on successful FDA approval and maybe faster than expected market uptake for Moxium, especially if regulatory pressure on opioids continues or increases.
So betting on Moxium becoming a blockbuster, what would be the catalyst to watch?
Positive FDA feedback on the application would be huge. Or, post-launch, seeing really strong early prescription numbers come through. That would validate the thesis.
Interesting. Riding the Moxium wave. Got another one.
How about a slightly longer-term, maybe contrarian idea? With the indoor facility issues hopefully resolving and that rebound expected in 2026.
Right.
You could consider a longer-term bet now. The thinking is the stock might be currently held back or discounted because of these temporary headwinds.
So buying when there's still some uncertainty.
Yeah, exactly. Betting that as operations normalize, the stock could appreciate. The catalysts here would be a successful reinspection announcement later this year, and then seeing confirmation of that rebound in, say, the Q1 2026 earnings report.
A recovery play. Okay. Two interesting speculative ideas there. Well, that wraps up our deep dive into Viatris' first quarter 2025 earnings call. Definitely a quarter with several moving parts, revenue headwinds, but also strong brand performance in spots and certainly some exciting pipeline news.
Yeah, and that focused on returning capital while navigating these global manufacturing and regulatory challenges remains key.
Absolutely. Now, just our usual reminder, everything we discussed here is for informational purposes only. It is absolutely not financial advice. Please always do your own thorough research before making any investment decisions.
So what are your thoughts on Viatris' pipeline, especially Moxium? What other factors from this call stood out to you?
We'd love to hear your take. Join the conversation online and share your insights.